You know that feeling when you've been watching a stock for months, you finally jump in, and then you watch it rip 63% higher like a rocket? You refresh your brokerage page, looking at that sea of green, and you're not thinking, I'm a disciplined investor. You're thinking, am I a literal genius? That is exactly where most people are with AMD right now. But here's the thing nobody tells you, the win on paper is often the starting gun for long-term mediocrity. Let's look at AMD's Q1 results. The numbers are undeniably solid. Data center growth hit 57%. That means their EPYC CPUs and Instinct GPUs are finally carving out real territory on Nvidia's turf. Gross margins ticked up 3 percentage points, and they're managing expenses like a precision watch. Management is even painting a picture of accelerating growth to meet insatiable demand. It sounds like a total victory, right? But in the world of finance, no number exists in a vacuum. Greatness is always a relative term. Most people buy AMD because it feels like the cheaper, high-potential alternative. But let's run the actual math. Nvidia delivered 73% overall growth and a staggering 75% gross margin. This shows that while AMD is trying to get strong, Nvidia is busy setting the rules. Here's the number that reframes everything: valuation. Here's the number that reframes everything: valuation. Looking at the P or E for 2027, AMD sits at 30x, while Nvidia is at just 17.6x. You are paying a 70% premium for a company that is growing slower and has a narrower moat than the sector benchmark. It's like looking at two houses on the same block. One is a turnkey mansion with a pool. The other is a fixer-up apartment. And the agent tells you the apartment costs more. You aren't investing in the future. You're just subsidizing someone else's optimism. Why am I downgrading from buy to hold right now? Because the most expensive word in investing is attachment. I still own the stock, but I'm realizing the margin of safety is getting dangerously tight. If the gap widens, if Nvidia gets cheaper and AMD gets more expensive, I'm starting a rotation, selling AMD to increase exposure to Nvidia. Your job isn't to fall in love with a ticker symbol, it's to direct your capital where it actually compounds. The essence of financial freedom isn't how many 60% gainers you find, it's about how many options you have. Real winning isn't about what you drive, it's about not having to show up to a job just to afford the payment. Don't just look at the green, look at that 30x P or E. Drop a like, hit subscribe. I'm not a financial advisor, I'm just the guy helping you avoid the alternative trap. See you in the next one.